What's up, guys? So I got Brad here with me again. If you guys missed our last video, we actually did a podcast and we're talking about cryptocurrency bubble, and I will leave a link below this video. However, in this video, Brad, what are we going to be talking about?
I think maybe what's been on my mind lately is the Ethereum conundrum.
Okay.
And the structure of the cryptocurrency markets in general. And like someone had a comment on the last video, which was, how did IOTA launch at like the number 6 market cap, at like 1.5 billion market cap? Like, how is that possible?
Yeah.
So we could talk a little bit about how that's possible.
Okay.
And how we might see more of that.
Okay, let's dive into it.
Yeah.
Sure.
So there's two separate issues there though. The first one is like, how does IOTA get launched at this high valuation? So IOTA was a project that raised some money about 1.5 years, 2 years ago, and they kind of spent the last little while developing the product, and then there was OTC trading happening. So for those of you who aren't really traders, OTC means over the counter, right? And it just basically means like people on Bitcoin Talk or on Reddit or trade groups on Telegram or Skype or whatever start saying, hey, I want to buy some of your IOTA, how much can you sell it to me for? Right? That's pretty much how it works.
Right, secondary markets.
Yeah, like, and it's just like a Google spreadsheet or something, and people just start entering their asks and their bids. So it's like an exchange, but like how they used to do it back in the olden days. How much IOTA do you want? Smoke with your pipe.
That's right.
So there's no pipes anymore.
God damn it.
But there's still the OTC trading. So IOTA was OTC trading for such a long time at these really super high valuations that it launched at 1.5 billion market cap, because that's just what people said it was worth.
Yeah.
So any altcoin can launch at like a ridiculous valuation, and just like how, you know, when someone asks you for the first time, like if they know you're into Bitcoin and they say, well, yeah, what gives Bitcoin its value? It's just nothing. You know, there's nothing that backs it. It's the same as like how an altcoin can launch at like 1 billion valuation. What gives it its value? It's like we give it its value.
Speculation on the future.
Yeah. So like with Bitcoin, it's you go deeper into that, and like what gives Bitcoin value? Well, what gives money value? What gives gold value? What gives clothes value? Like what gives anything value? It's like the value is what we give it. It's what people agree to give it. And so that is what ended up happening with IOTA. Now, obviously, it's not just that. There's, you know, they had the relationship with Bitfinex, and Bitfinex is one of the major exchanges. So the same thing happened with Economy. When Economy launched, they did an ICO, and they launched on Kraken. So when you launch on a big exchange like Kraken or Bitstamp or Bitfinex, then you're pretty much guaranteed to be like the big boy league.
Yeah.
IOTA, I think, was the biggest. I'm pretty sure it was like the biggest launch, like in terms of valuation.
Really?
I'm pretty sure it was. Yeah.
$1 billion plus is a lot.
Yeah, that's a lot, especially for an altcoin that has no like usage right now.
Yeah.
As far as I know, there's no usage for it. I don't know.
It has an interesting technology because it's Tangle technology.
Can you explain that or tell me what it is? Like,
honestly, I'm not well versed on it yet.
I missed IOTA ICO. My buddy got into it. I know a couple of guys that got into it, and he's like, "Hey, you want to throw Bitcoin into this with me?" I was like, "I'm burnt out from ICO." I was like, "I'm gonna hold my Bitcoin." And he's just laughing now.
Honestly, I'm not well versed. I can't really make an opinion yet until I do my due diligence and talk to really smart people about this technology.
Well, I know IOTA uses something called a DAG. I think it's called a. I don't know what the D stands for, but it's something acyclic graph, and it's like a knot. There's blockchains, there's ledgers, and there's DAGs, and so there's these. I'm gonna Google it right now, so I don't. What is a DAG? Siri's not gonna know what a DAG is.
Nah, you gotta type it in.
I'm gonna Google that.
See if we find it. I think I've seen a graph though of it too, the Tangle Tech for IOTA. Somewhere here. Find it?
A directed acyclic graph.
Yeah.
So it's a different type of consensus mechanism that's not using blockchain technology, not using ledger technology.
Yeah.
I think it's like a play on databases.
Okay.
In some way. I'm not super versed on the technology behind it, but as a tip, I guess, like, I don't know if I should be giving tips here. What do you think?
I tell everybody, we don't give advice.
Well, I'll just tell you.
I personally don't give advice, financial advice. I am not a trader. I am not a financial person, and I have no fiduciary obligations to anybody.
And the same thing for me as well. But what I look at personally is when I saw IOTA pump that much, like on the launch, I'm like, okay, what's the most unique factor of this thing? It uses a directed acyclic graph technology. What other cryptocurrencies have this DAG technology? Because I want to put some Bitcoins into that as well. So whenever there's an ICO that launches or that is raising a big amount of money, I like to look at some sort of like existing project that's already trading on exchanges that has those properties and buy a little bit of that if it's undervalued compared to the one that's up right now, or the one that's launched or whatever, high valuation. So the one that does also use a DAG is Byteball. So GByte is the name of it.
Where the fuck they come up with these names?
I don't know. That's the stupidest name, Byteball. Like, I ignored it for the first month when I heard the name Byteball. Like, what the hell are they thinking? Like, Byteball, it's such a stupid name. Yeah. But hey, it's actually a decent technology when I looked into it in the end. They have these two currencies, the byte, the GByte, and then the GBB, some people call it, and the black bytes. And the black bytes are their anonymous sort of currency. So it has like two different types of cryptocurrency in the program, and they actually have chatbots integrated into the wallet. So it's an interesting one. But anyway, back to the question of like how can it launch at $1 billion some valuation? Yeah. Well, there's part of it is market making. Like one of these things with cryptocurrencies that not a lot of people know about is market making, and it's where these whales in the coin will sort of manipulate the price up or down.
So they do.
So they do, yeah. Yes. And not all of these whales do it to make a lot of money right away. Like some of them are very patient, and they're willing to lose a lot of money.
It's no difference in what Carl Icahn or Soros does.
I don't know enough about those guys.
That's a whole different video.
But yeah, I can imagine in the traditional markets. I imagine they're manipulating prices up and down. Yes. We're in an unregulated space right now, so things are happening in the cryptocurrency space that are not allowed to happen.
Well, you showed me that cool graph you want to show people. Yeah. That Wall Street, what's it called, hype cycle?
There's like the Wall Street cheat sheet. Yeah. And then there's the market structure. So here's the Wall Street cheat sheet. I don't know if everybody can see that.
Yeah, they can see it.
It's not going to focus.
No,
oh, there we go.
Yeah, it's good camera.
So, you know, one of the things that I'm trying to figure out right now is like, where are we on this chart here for Ethereum and the cryptocurrency space in general? Now, it looks like we're in that green zone, like leading up. I mean,
right before the top.
Yeah, right before the top, like right there.
So what is that zone? Like, what does it say?
That's the belief or the thrill.
Ah, okay.
So a lot of people are feeling pretty thrillish right now with the profits that they're getting from the last year.
Because they never felt pain before.
Well, a lot of us have felt pain, but then a lot of the new people that came in the last year have not felt any of this pain. Yeah. Like I've been through this cycle probably like 3 times with Bitcoin. Yeah. And here's the other one actually. That Wall Street cheat sheet came from this guy, Brian Shannon's book, Alpha Trends, Understanding Market Structure, or Technical Analysis.
It's a good book, you recommend it?
Multiple time frames. I do, yeah. It's a short read and it gives you a good idea of like what drives the bull market and the bear market and what's that?
There you go, message, man. Everyone just saw that message.
Need a coin, follow him on Twitter. So obviously it looks like we're in that green zone there. So on both of these charts we're in like the green zone, right? We're going up high, we're feeling great. It's almost to the point of euphoria for some people. And it cannot go on like that forever. What's this guy coming in now? Rads. I don't know. This is my phone is non-stop giving me updates. I do a lot of sentiment analysis by subscribing to a lot of traders, and then
crowdsourcing the data.
Yeah, it's kind of like
seeing some patterns.
A bit of a swarm intelligence algorithm.
Sure.
There.
Why don't we just have an AI that just swarms the social media?
I love that. Somebody
don't they
build
have
that
it already?
for me. I'm sure someone does.
Well, what the fuck are we doing it manually for?
I waste all my time.
Right.
But that's, I mean, this structure plays itself out in every market. It's not, cryptocurrency is not like, okay, so there's some people that don't believe that this cycle is going to play itself out because they think that because cryptocurrency is an evolution of like money and all this stuff, that the fundamental demand from people that are exiting the traditional money space, right, and coming into crypto is going to support this growth for quite a long time.
Technology aside, it all goes back to human behavior.
It does, but like I kind of see their point. We could still be in this like hope phase, you know, right at the very beginning, right in the blue section. We could be there. I mean, we could actually be in this phase because if the global derivatives, like 1 quadrillion global derivatives bubble pops, and like,
or if the education bubble pops, which like in North America is $1.2 trillion owed for education tuition.
So if that pops, or if like, I think I even read somewhere that the car loan industry is kind of like mimicking the the housing bubble. Like there's derivatives on car loans.
Where the fuck are people taking car loans in the first place?
You gotta get that Tesla, man.
Overpriced, man.
Yeah.
I love Tesla. I love where they're going, but it's overpriced right now for most people. It's not applicable for the majority of society.
Well, I don't know, man. If my bubble indicator is like Lambos. When I see people posting Lambo pictures from their cryptocurrency profits, that's my bubble zone. Like that's euphoria right there. I think that would be euphoria. Teslas, I'll let that slide if they start posting Teslas. But I think like if people argue that, well, if all this stuff happens, and then you know the real markets people start to lose money and the bubble pops in the real markets, like the everything bubble. I think this guy Jesse Felder, I think his name is, I follow on Twitter. He's like a kind of like he does a podcast on the regular markets, and you know, he posts infographics all the time. So I use him kind of as my way to like stay grounded, because I'm always tuned into the cryptocurrency bubble, because I've been through it twice already, and I see it forming again, and I don't want to get caught.
So what are you doing right now to diversify? Like, let's give some, I don't know, your own personal experience right now. What are you doing to protect yourself?
So this is what happened to me. The pattern that has played itself out in the cryptocurrency before is that we follow this Wall Street cheat sheet sort of like, you know, angle or you know, parabolic rise up, and then everything like, you know, rising tides. What is it? What's that thing?
Oh, rising tides bring ships up together. I don't know, some shit like that.
Something with ships and tides and stuff.
If the tide goes up, well, the ships goes up. Tide goes down, the ships goes down. Right. There you go.
So the rising tide comes, and then all this, the altcoins rise up with it, and then the tsunami comes, and then all the ships sink together, right? So that's pretty much what has happened. Has played itself out a couple of times already. Now you get people that are kind of like a sovereign man, like that guy that, I don't know if you know who that guy is.
Who?
His name is, I can't remember his name, I can't believe it.
What does he do?
He has a podcast, Sovereign Man. Yeah. But he's like, you know, it's like doom and gloomer types of guys. Sure. Like Peter, the guy, the gold guy.
Oh, Schiff.
Peter Schiff, guys like that. Like they sell you gold because they are banking
doom and gloom of the future.
You know, like on the
apocalyptic future, we're all gonna die.
the Black Swan event's gonna come and everything. But you know, like that could happen. Yeah. And then we would have a rush of new money, like coming into the cryptocurrency space, and we'll probably go another 10x to $1 trillion in total capitalization. $1 trillion to me is not a big. It's not. I mean, it's gonna get there no matter what, but it's a matter of like, is the bubble gonna pop and then get itself back up there, or is it gonna shoot there, or is it gonna like go up and correct and go up and correct? It's a matter of how we're gonna get there. I think in the next 3 to 5 years, we're definitely gonna be at $1 trillion in the total cryptocurrency market space. That's gonna look like nothing. Like the .com bubble was what, like 2 trillion or something, and that was in like $2,000. Like
that's right.
You gotta like take in all the fractional reserve increases and all the quantitative easing,
QE baby,
the QE money that's been pumped in. I mean, we could get to like $5-10 trillion before this thing pops if Wall Street gets in.
Quite possibly, or forget even Wall Street. You're seeing the I would say hunger in China, hunger in Russia.
Yes.
All these other foreign nations.
That's the other thing about the bubble, the Wall Street bubble. Everybody always compares us to like Wall Street, you know, the .com bubble.
Yeah.
And saying like we're probably 98, 97, 98, maybe 99.
Yeah.
But like the .com bubble was like a US based.
Pretty much Silicon Valley.
Yeah.
Some other, you know, VCs, the one that had exclusive access around the world. But this is more distributed.
This is global. Like
Yeah.
this is like anybody can get into cryptocurrency.
Yeah.
Anybody can sort of like.
And the liquidity is more.
Hey, yeah, the
Because
liquidity.
back then you had no liquidity.
Yeah, you had to get a private.
The only way you got liquidity is if you had a Series B and C.
Right.
So the Series A guys can get paid.
Yeah, that's true. And you had to be an accredited investor, and you had to be
Yes.
on an exchange.
Yes.
Like, this is cryptocurrency, completely open to anybody, whether you got $10 or like $10 million.
Yes.
And you can start trading these things. So
Yeah.
I feel like the fundamentals are there for us to not have a big pop, like as soon as the like, you know, as soon as it should be now. You know what I mean?
Yeah.
Like it should have happened already. I feel. So I was prepared last month or 2 months ago for the bubble to pop already. I didn't
Okay.
think we were going to get to 100 billion this fast.
Okay.
So how I prepared was I was diversified into over 100 different altcoins.
Crazy.
And I wasn't sure, because I'm not sure which one is going to end up being
Of course
the
not,
winner.
man.
So I'm diversified. I kind of like run my portfolio as like an index fund of
Okay.
the whole space.
Okay.
But I was like turtling into Bitcoin more and more,
Sure.
because I feel like if the bubble pops, then a lot of people are going to fly back to Bitcoin.
Okay.
But we just kept going, and the Ethereum run caught me by surprise. I didn't think that was going to happen so fast, even though I kind of knew that like the
Watch out for
ERC20.
the next Ethereum run in November.
Yeah, the EOS run.
We know the DevCon.
Oh, DevCon.
Trust
run.
me.
Yeah.
There's going to be a run.
Well, that's the Ethereal Summit in New York
Yeah.
was the first like big.
You saw it. Just look
Yeah.
at the price.
So as soon as that happened, I knew like the next week consensus was happening.
Yeah.
I'm like, if this happened to Ethereum, it's gonna happen to every cryptocurrency.
Yep.
So I'd like,
But it's no
I came out of my turtle shell.
But it's
and I
no
went
different than when Warren Buffett does his Berkshire Hathaway.
Yeah.
No different. Exactly the same pattern.
So it's like you got to try to stay ahead of this bubble and be prepared for it, and just like I guess sometimes you just can't be prepared for it, but
Yeah.
you got to be able to be mentally prepared for it, because it can happen, and we can have that like down section of the Wall Street cheat sheet where the emotions of like fear take over. Right now it's the emotions of greed that are like causing this run up, and when fear takes over, that's when you get that capitulation where you just see it. It's like 80% evaporated wealth. Like that's what's probably going to happen if the bubble pops. Now,
Diversify. That's
you
it.
can be diversified and try to pick a good fundamental coins to be in that have like their own unique consensus mechanisms, or get yourself back into fiat a little bit and then be ready to buy in when it does drop. But really you can't know, and the only thing you can do is be mentally prepared for it and be aware that this is probably going to happen. And if you're like putting all of your life savings into cryptocurrency, expecting it to like only keep going up, I mean,
what goes up must come.
it must come down. It must come down. And a lot of people, like these doom and gloom people, that are like saying that the real traditional markets are gonna totally collapse, and you gotta get into gold, and now they're saying into Bitcoin and cryptocurrency. And there's no way this is a bubble, because look at what's happening all over here in the real world. Like that's coming into cryptocurrency. As people get afraid and they start having negative interest rates at their banks and stuff, they're gonna come into crypto. And so that stuff I don't know. I don't know if that's gonna happen. Like I feel like it's an emotional market. It's gonna go up and it's gonna come down. I don't see it just going straight up and not stopping.
So to summarize, people just need to be educated. Don't get sucked up into fomonomics, right? If you're missing out economics, Brad has a PhD in that, if you guys are wondering. Fomonomics. And that's right, diversify your fund. I would actually recommend people read Ray Dalio's book, Principles. It's a really good book. Do you have any recommendation? You mentioned the book earlier.
Well, you said George Soros, right? George Soros had this book, Alchemy of Finance.
Alchemy of Finance, It
was like in the 1980s, I think he wrote this book, and I think I sent you that, didn't I?
Yeah, but the audio sucks.
Yeah, and it's like it's the first like 45 minutes are terrible. Like I could not get, I almost gave up on it. I texted him like, man, don't listen to that book, it sucks. But then he got past the boring, like, oh, look how many big words I can use in a sentence part. And he got to the actual meat of it. And he was talking a lot about how, like, you know, what drives the markets and its emotions and its news and its fear of missing out. And it's like a lot of the same things that
marketing, man,
plays out in every market, and it's going to play out in cryptocurrency, and it is playing out in cryptocurrency. So that's a good book too.
Cool. We'll leave it at that. You know, hope you guys enjoyed this video. If you guys have any comments, obviously leave a comment below this video. Best resource to get in contact with you? Email, Twitter, right?
Yeah, you can get me at Brad Mills Can, like Canada.
That's right.
Or Canada.
There'll be a link. Yeah, exactly. There'll be a link below this video. All right, guys. Peace.